Welcome back everyone to episode number 26 of the S and Reza podcast. And in today's episode, it's going to be myself solo. And I want to talk to you guys about where the market is right now, because there's a lot of stuff happening out there with interest rates, home prices trending downwards, listings staying on the market for a lot longer than we're used to. And so I thought this would be a great opportunity to give you guys a update and bring you up to speed as to what's going on, so that if you have any thoughts of buying or selling in the future, at least you'll have this information handy before you make an informed decision. So the first thing I want to do is talk about the market stats for the month of September and see how they compare year over year and also month over month. So sales were actually down by 7.1% in September, and we had a total number of 4,642 sales. This is actually a surprising stat. This is the lowest sales that we've seen in about 25 years. So the last time we had about this many sales was actually back in '98 when I was still in elementary school, I think, or maybe just finishing up elementary school. So that's how far back I'm going here. But just to put things into perspective, the reason why we're seeing a number this low when it comes to sales is obviously because of higher borrowing costs. Interest rates have gone up rapidly in the last 12 months, where the Bank of Canada has increased its rates so much to the point where a lot of buyers are now on the fence, or they simply cannot qualify for a mortgage. Now, when I look at average price, the average price actually went up by 3%, and the average price was hovering around $1.19 million. Now, again, to put things into perspective, even though the average price went up, it doesn't mean that the market went up either. It just means that there were higher end homes that were sold. So when a higher end home sells, obviously the price point for that house is going to be higher. And so that sort of brings that average price up. So it skews the stats a little bit. Now, for me, the number that I like to look at more is the month over month trend, and especially now because we got to follow trends to kind of see where the market could be heading in the future. Now, if I compare month over month, when I look at sales were down almost 12% from the month of August. The average price was still up by 3.5%, but again, like I said, that number can be skewed, but it's that sales number that I'm really looking at. The other stat, which I found really interesting, which indicates to me as to what kind of market we're sitting in right now, is the new listings. Now, for the last few years, you've heard me constantly say that we're having a supply issue. We're always in a supply constraint when it comes to the Greater Toronto area. Well, for the first time in a very long time, we actually don't have much of a supply issue. Supply has actually gone up. Inventory went up by 44%. That's a huge number. That's a dramatic number. And I think the reason why we're seeing inventory rise is for two reasons. Number one, there's a lot of investors out there that invested in condos and homes who have seen their mortgage rates, double in the last 6 to 12 months. And they've basically said that, the rent that we're getting is not covering our expenses. And now it's been a year, 2 years where they're negative cash flow, almost $1,000, in some cases even $2,000. And so that's prompting a lot of investors, especially condo investors, to put their homes on the market and sell those properties. The second thing is homeowners, people living in their own homes. I'm starting to get calls from people who are feeling the pinch a little bit more now, and now some of them are putting their homes on the market simply because they may not be able to afford the mortgage payments. Now, haven't seen a flood of inventory hit the market completely, but definitely a 44% increase in new listings is nothing to ignore. So that's a number that I think we're going to keep an eye on and see where things go. But inventory has gone up, supply has gone up. If I were to say, what kind of market we're in right now, I wouldn't say that we're in a total buyer's market. But we're probably more in a balanced market. I would say that extreme seller's market that we saw in years past, that definitely has gone away. And that brings me to my next point is, what are some of the advantages of home buyers in this current market that we're seeing where supply has gone up? Well, one of the advantages that a lot of home buyers, a lot of my clients personally, are able to actually go into a home and negotiate one-on-one on the price. So we're not seeing homes sell over asking price all the time anymore. In fact, we're actually seeing sales go below the asking price in a lot of scenarios. So just to take my own examples, we've been able to negotiate contracts and deals where we've gotten homes for 25,000 below asking, 30,000 below asking. In some cases, once in a while, even 50 to 100,000 below asking when you catch a desperate seller. So we're definitely in a more balanced market. So that's one of the advantages that home buyers are going to have in the next few months. The second advantage is that the home buyer can actually negotiate the terms and the conditions now. So in years past, you obviously heard about home sales going firm, which meant that the buyers had to waive their inspection condition or their financing condition, and that's a big deal because now in this market, if you buy a home and you can do a proper inspection and you see red flags, you can now back out of that home and make an informed decision. So to me, that's a lot of value. The next thing is choices. There's a lot of choices on the market right now for home buyers. I'm showing a home buyer right now properties in Stouffville and Markham. And, normally in years past, we would probably see maybe, 3 or 4 homes on a single weekend. But now it's like we need to schedule 2 or 3 days because we can probably see 12 to 15 homes on a single weekend. So that's the kind of inventory that I'm seeing hit the market. There's a lot more choices. Buyers, you don't have to make a rushed decision. You can actually now take your time, see if the house is right for you and not settle for a home just because the market is red hot. Now, at the same time, I like to be objective, and although there are several pros to this market, there's also several cons as well. And the biggest negative, I would say, is the mortgage expense. When you buy a property in this market right now, expect to be paying a lot higher interest rates. Interest rates are hovering now in between 6 or 7%, whether you go fixed or variable. And so where a mortgage before was maybe, let's say, $2,500 a month, it could be $4,000 or it could be $5,000 a month. So as a home buyer, yes, you are getting in at a much lower price point. You are going to be able to do your home inspection, get your financing in order, but you are probably going to have to pay a higher price tag when it comes to your mortgage payments month over month. Now, the mortgage terms obviously is not going to be something that you're going to be paying for a very long time because in Canada, we have 2, 3, 4, and even 5-year mortgage terms. So after that term is over, you can renew the mortgage. And if in the future the rates do come down, you can also renew at that lower rate when that happens. So now let's talk about home sellers. A lot of home sellers in this market are struggling to sell their homes. And the reason is because the number of showings have dropped considerably in the market. There's not a lot of buyers in the market right now, either because they're on the sidelines waiting for interest rates to come down or simply because they can't afford it. So as a home seller, what are you going to do in this market? Can you even sell your property within, let's say, a week or 2 weeks? The reality is that right now, it's probably taking about, I would say, a month on average to sell a property. I mean, the average days on market is around, I would say, 30 days or 25 days. But realistically, the homes that are selling are the ones that are in good condition, are priced well, and show well. So as a home seller, I think a lot of us were spoiled in years past where we were flooded with showings in the first week and you would probably get a price over asking and have like 8 or 10 offers on the table. That's not happening anymore. And that was an abnormal market. We're actually in a normal market right now where it does take 30 or 60 days to sell a home, and you may not get the asking price, but you might get something close to it, a little bit under. Now, just to give you guys a perspective, and when I'm talking to clients right now, a lot of people still feel that they can get what they got last year or the year before. And I think we all need a reality check. Prices have come down. And so if your property, let's say, is worth $1 million today, and maybe last year it could have sold for 1.1. You as a seller can choose to list it for 1.1, but in all fairness, the property is going to be worth $1 million today. So if you list your property over what, let's say, the actual value is, and that property sits on the market for, let's say, 30 days and it doesn't sell, and then you decide to readjust and bring that price down to 1 million, well, now maybe that property might not be worth $1 million either. It might be worth 950 now. So essentially you just lost 30 days of time where you could have got maybe $1 million if you had listed for $1 million, but because you didn't get ahead of the market, instead you thought that maybe I could get more than what the market is predicting, that essentially might have costed you not just $100,000, but $150,000. So I think in this market, I know it's hard to fathom that, you know, I'm gonna get maybe 100K less or 200K less, but I think you've got to be very, very aggressive in your selling price in this market. Not to the point where you have to underprice your home, but you have to price it accordingly to what maybe the neighbor sold a couple of weeks ago, right? And you have to look at how your property compares to other properties. If your property is smaller, you're not going to compare to a bigger property. If your property has more renovations, you're not going to compare to a property that has less renovation. And so you have to do your due diligence. And that's where, if you speak to a realtor like myself or anyone else, you know, we can give you that advice and tell you what would be an appropriate price point, just so that you can get what the value is worth today and not lose more money on the table. Okay, and now everyone's favorite topic, what's gonna happen with interest rates? So as of this recording, it's October 17th, and today the inflation numbers just came out early this morning, and inflation actually came down, although it was a little bit, it still came down. And so the Bank of Canada is going to make their announcement on October 25th. And that's when we're going to find out whether or not we're going to see another rate increase or not. Now, I've had several predictions in the past. I've been right half the time and I've been wrong as well. I hate doing predictions, but if I were to predict what's going to happen in the next announcement, I still feel like we're not going to see an interest rate hike. And the reason for that is because I think we've already sort of hit a tipping point where a lot of people are struggling. A lot of people are feeling the pinch, and it's getting pretty ugly out there, especially when it comes to costs, expenses, groceries, gas. And, you know, I could be wrong. I mean, the Bank of Canada, even they don't know what they're gonna do, I think. They're probably gonna find out maybe a couple of days before as to which direction they're gonna go in. But inflation was down, the economy contracted a little bit, job growth was actually steady. So these are all indications that the Bank of Canada looks at before they make the decision. Obviously, we're not experts in the interest rate data. All we can do is look at the information, but it's the Bank of Canada itself that's going to be deciding on October 25th. So look out for the announcement on October the 25th. If you're hoping that rates are going to come down, I can tell you 99.9% that's not going to happen. Rates are not going to come down on October 25th, nor are they going to come down anytime soon. And even if they do come down, they're not going to come down to what we were accustomed to a couple years ago or even a year ago. And so as a homeowner, I think we all need to be prepared and ready that the next 6 to 12 months, maybe even 18 months, you know, it's probably going to get a little bit more tougher for a lot of homeowners. And if you have a renewal coming up in the next year or two, my suggestion to my clients right now is that the rate that you're fixed in at this current moment, let's say if it's a 2.5% fixed rate and you're renewing next year, you're not going to be paying 2.5%. You're probably going to be paying double that. So start making preparations from today. Start building your reserve fund. Start building some cash flow. Maybe there's a basement you can rent out when the renewals go up. Maybe there's a room you can rent out. I don't know, maybe you can downsize, maybe you can lessen your mortgage, maybe you can find other ways to make cash on the side. Because if you don't prepare for that right now, then you're gonna really feel the hit when it happens. So if your renewal is a year or two away, start making preparations now, because your mortgage payments are going to go up, your costs are going to go up, and it's imperative that you take action now than wait last minute and then have to rush and make a decision that you may not like, and that could be maybe selling your home at a loss, which nobody should do. But when it comes to that, there are going to be people in the market that are going to have to make those decisions, unfortunately. The next hot topic that I want to discuss is this a good time to buy? And a lot of people have been asking me that question. And naturally, with prices going downwards, a lot of buyers are going to be on the sidelines. And with interest rates going up, buyers are going to be hesitant because they're thinking that, well, the market's pretty volatile. I'm not going to buy now. The market could go down even further. And so now people are in that mindset of timing the market. Timing the market is probably the biggest mistake people can make because number one, you're never going to be able to time the market. If we could time the market, we would all be millionaires. And it's really difficult to time the market accurately. Now, you may get lucky, but time the market is something that even the most knowledgeable economists and real estate investors weren't able to do. So going back to the question, is it a good time to buy? It really depends on your situation. Everyone's situation is different. It's a case-by-case analysis. There's not one shoe size that's going to fit everybody. If you're in a situation where you need to buy because your family is growing, then you need to buy. Or maybe you rent a bigger home. If you're in a situation where maybe you thought of buying, but it's not an urgent need right now and you can wait, maybe you don't buy right now. Maybe you keep a pulse on the market and see where markets are trending before you decide to pull the trigger. If you're in a situation where you have cash in the bank and you're sitting on that cash and that cash is not earning you a single penny, in fact, it's losing you money, and you see an opportunity in the market, that might be a good opportunity to actually pull the trigger and get that opportunity, because my philosophy has always been this, is that I always like to buy when markets are trending downwards instead of buying when markets are going back up. It's kind of looking at a stock. When you look at a stock and you're following it and you're seeing it go down, every single day, at some point you're going to have to buy that stock, right? But what happens is that people let that stock slide. It goes down, down, down. They say, well, we're going to wait until it bottoms out. Next thing you know, you wake up one day and then the stock makes a little bit of an increase. Then you're going to say, you know what? I'm going to wait because it might go down again. But it goes up again and again and again. And so that turn happens. And what happens is that you ended up losing on an opportunity because you thought you could time the market. And because you thought you could time the market, you missed out on what could have made you a lot of money. And so it is possible that you buy in a downtrending market. Let's say you bought a house for $600,000 today, and maybe in a couple of months that same house could be bought for $575,000. That is a possibility. On the other side, it's also possible that the home in 2 months could be worth $625,000. So it could go up, it could go down. But at the end of the day, you have to know for yourself, is this a good time for me to buy? And the one last piece of advice that I could recommend to anyone who's in the market is to do your homework, do your due diligence. You don't have to rush, especially now in this market. You can do a lot of homework, do a lot of information, talk to realtors like myself, mortgage brokers, find out what you can buy, what you can afford. There are so many opportunities out there, both in hot markets and cold markets. But the biggest mistake you can make is to lose complete touch and lose your pulse on the market, because if you do that, then you'll miss out on every single opportunity that comes your way. Well, I hope you enjoyed that market update for the GTA. If you have any other questions about the market, please give me a shout. Whether you're looking to buy or sell or just need some information to make a decision, don't hesitate to reach out to me. I'd be happy to give you a lending hand. Please be sure to share, subscribe, and like this channel if you want more information, and we'll see you at the next episode.